If you have a family member that needs some help buying a home, I've got some strategies for you I bet you haven't heard of. And with these 3 little known tips, you can help a family member buy a home when they otherwise might not be able to. Whether it's for an aging parent, a college-bound child, or somebody that just needs a little bit of a financial boost, I've got some strategies for you. And if you want to learn the ins and outs of buying, be sure to go ahead and subscribe so you can learn what you need to know. A little known and little used tip from Fannie Mae, who is one of the agencies that sets conventional guidelines, is a strategy called the Family Opportunity Mortgage. The Family Opportunity Mortgage is an option where you can purchase a home as a primary residence for an aging parent or for an adult child who is disabled and needs a little extra help. Additionally, keep in mind this isn't a home that you yourself is going to have to live in. The benefit to you is that the down payment can be only 5%. And because it's considered a primary residence, that also means that the interest rates are going to be lower than if the home was purchased as an investment property. Additionally, the family member who is going to be occupying the home does not have to be on the loan. So if they do not have enough credit or if their credit is not good enough, that does not prevent you from proceeding with this strategy. What this means is this allows you to have a loved one in a home at a lower cost and bring everybody peace of mind. The second tip is one of my favorite strategies to help combat the rising cost of college. This is where you can purchase a home for your student to occupy as their primary home, even though they don't have any income. It's called the Kitty Condo Strategy, and what it means is that the child, the college student, is on the loan and the home is considered a primary residence because they will be occupying it, but the parent or parents are also on the loan and it's their income as a non-occupant co-borrower that is actually supporting the loan. Everyone on this loan does have to have credit that meets whatever credit standard is needed for that loan because it can be done with both an FHA or a conventional loan. However, because it's considered a primary residence, it means that the down payment can be as little as 3.5% to 5%. Versus with an investment property, the minimum down payment would be 15%. Lastly, the interest rates are also lower. Interest rates on a primary home are less than an investment home, so there's additional savings to be had there as well. And lastly, it does create the opportunity to rent out the extra rooms to other students to create an additional revenue source from that rent collected to help offset the mortgage payment for the home. Make sure that you're working with a financial planner and or tax expert to make sure that everything is set up correctly if this is a strategy you plan to use. And the third tip is what's called using a non-occupant co-borrower. In today's housing market, prices are rapidly appreciating. This often puts a home out of economic reach for some borrowers. A lot of times that's coming because while there might be income that's coming into the household, perhaps from a second job or a side hustle or new self-employment, it does not meet underwriting guidelines and can't be counted for qualification. So although they can afford the payment, on paper, from a mortgage perspective, they don't qualify. So in this strategy, I'm not talking about living beyond your means. I'm just talking about a strategy that helps to meet mortgage guidelines to help someone get into a home. And in this case, you have a non-occupant co-borrower, someone else on the loan that is not going to be living in the home, that adds additional income to those calculations. Same as before, everyone's credit does need to meet the minimum guidelines for that loan. And also any debts that that non-occupant co-borrower has will be factored in. So if you think that it's tough to qualify for a mortgage, or if you have a situation that maybe doesn't fit exactly in a box, know that there are options available and go ahead and comment with any questions that you have, and be sure to follow for more home buying tips.